Okay. Rishi, John, everyone's got the recording set up?
Yeah, it's started.
Okay, sounds good. So, hi everyone. My name is Ananya. Today, I'm going to be telling you guys about our guest speaker, Jack Selby, who we're very, very excited to have. John can go to the next slide. I'll give you a little bit of background on Cash Club to people who are not members. Next slide. Okay, so Cash Club Corp is a nonprofit organization dedicated to democratizing investing for high school students. We provide resources to start investment clubs at your high school, and currently we have over 50 clubs across 6 continents. We also help to do spring exclusive events, opportunities, and programs. Right now, we have $1,000 scholarship for any graduating senior. It is a requirement that you are a member of Cash Club branch. Shivam is going to put down all the links for that as well in the chat right now. We also have a stock pitch competition going up where the grand prize winner will get $250. We have 3 grand prize winners giving out $75 each. So make sure to apply for that. There is no requirements being part of like a Cash Club member or anything. And a little bit about Jack is he's the co-host of the Iced Coffee Hour with Graham Stephan. I'm sure you've all heard of him. He's also an avid spec ball player and very, very knowledgeable about investing. And today he's going to be speaking about investing with a plan and a little bit about his background. And then after that, we're going to have like a 30-minute Q&A session. So if you guys have any questions, just start putting them down in the chat. I ask that you guys please do not unmute yourselves. You can have your video on if you'd like, and we will start from there. Jack, if you want to introduce yourself.
Sure. So hello, everyone listening. My name is Jack. I'm 22. I live in Las Vegas, and I host a podcast called the Iced Coffee Hour, where we talk about personal finance and investing. Just to give you a little background about my investing experience and stuff, I've been investing since the age of 11. And I was fortunate enough to have a father that studied finance in college, and he had a mild interest in stocks. And I was kind of, I don't want to say forced, but kind of forced into investing at a young age, just because it was around me and talked about a lot, just between my father and I. So I was fortunate enough to get into that at a young age and get over that the first hurdle of learning to invest, being able to stomach ups and downs. Being okay with losing a little money here and there in the market while still having an understanding that if you play your cards right, which isn't very hard to do, it can really help you out. Let's see here. So I want to start this out with a little story. So I have a buddy who's 17 years old, and he's been investing for a couple of years now. He mainly does buy and hold investing, but on occasion he will do day trading and swing trading. He's 17, he's investing and learning, and he hasn't lost his entire account. So I would say he's doing pretty well, because even if you are losing money, but investing at 17 years old, that's a good thing. It's like you can lose money while investing. The most important thing is that you learn. I think that it would be very worthwhile for a lot of people that are, under 18 to start investing as soon as they can, even if they are losing money, even if you lose $3,000 in the stock market. It's so worth it, considering how much you can learn and how you can know not to duplicate that again. Let's see here. So the thing about investing is that if your portfolio isn't moving a lot, sometimes it can get really, really boring. And I've experienced this myself. It's like with my Robinhood portfolio, sometimes it will be a month and it will go up and down maybe by like 0.5%. And it's just like, I want more excitement with my investing. Well, that got to this kid who's 17, and he decided to go really heavy into GameStop last week. And GameStop is a very risky stock, just considering everything that's going on there right now. And he lost, I want to see in chat, take a guess how much money you think he lost. He's 17. So obviously, he probably doesn't have that much money. I want to see 2 guesses. Okay. 5K, $1,000, 10K, 100,000. Okay, 2K. Okay, fair enough. He lost $24,000 in one day. Like not even a week, not even like, a few days. He bought during the earlier portion of the day and he sold during the later portion of the day, and he lost $24,000 in one day. Now, obviously being 17 years old, it's impressive that he has $24,000 to lose. He has a really stable job. He's got like a YouTube channel. He makes a lot of money, but he's like trying to get into a new form of investing, lost $24,000. He texted me later that day and he said, Jack, I lost tons of money yesterday and I just want to forget about day trading. I'm over day trading. I just want to put my money in something something really boring and something that it will be safe for my money to sit in for 30 years. Yeah, it is a whole Honda Civic. It's a lot of money. But he texted me. He was all just like bummed out, obviously, probably pretty depressed. But he just wanted to put his money in something boring that isn't so volatile and won't experience those same, crazy ups and downs that are there in like, his trading style with like the day trading and stuff like that. So he wanted something boring. And you see, it sucks to lose money in the market. And I've had those experiences too. Like I've lost money in the market quite a few times. And it has never deterred me from investing, because even if you are losing money, you still have to know deep down that so long as you're being responsible, it's inevitable that you will have days where you lose a lot of money. Obviously I've never lost $24,000. I've never like gone so risky into plays, but you still have to have that belief that if you do play your cards right in the market, things will be okay for you. And although he lost $24,000, he didn't give up on investing in the stock market. He just gave up on day trading, which I think, if all of you are like, 16 to 18 years old and you're considering day trading, just go ahead and skip that step. I've tried it. I lost money. I know plenty of people that are like 16, 17. They're like, oh, I watch this YouTuber, he makes money day trading, and you guys try to do that. You'll lose a few $100s. I'm not going to say any names who the 17-year-old kid was, but that's a good guess. He guessed Jack Doherty in the comments. But let's see here. I had this phase a few years ago. I would wake up at market open at 6:30 a.m. Pacific Standard Time, which in itself is just a miserable thing to do. And after slowly draining the money in my portfolio, I ended up losing, it was only a few $100, but I felt terrible and I never wanted to day trade ever again. So I got that out of my system, fortunately. Of course, even though I did end up losing money, I still had this knowledge and the confidence that if I do play my cards right, things will be okay. So I guess what I'm trying to get at here is like, you're going to lose money if you invest. This is for new investors. You're going to lose money. Get over that hurdle and that fear of putting away that $100, losing, whatever it may be, a third of the money to your name, depending on like how much money you have. It's okay. You will 100% lose money, but it's kind of like college tuition and the fact that you pay a little bit of money right now for knowledge that will bring you so much further in life, financially speaking. I'm definitely still learning. I've lost over $1,000 recently on some hype stocks. I tried to do the whole AMC and Nokia thing. Nope, bought at the peak. But it's a learning experience. Even though I have been investing for 10 years, I still fall victim to these traps on occasion. I lost some money that hurt a little bit right there. But I know that a lot of people that do try to get in the stock market, they lose a bunch of money on some risky plays and then decide that the stock market isn't for them and they quit investing. And that is the worst thing that you can do, because if you do that, first off, you're down thousands of dollars. And then second off, you're prolonging investing and saving for your future until some later date, even if you decide at all that you want to continue investing later on in life. The most important thing in investing is the amount of time that you have your money in the market. That's how you'll really see some growth in your portfolio. Don't let these stories tell you that I told you scare you from investing. I think that's important that we learn from them insofar as like you will lose money, but it will be okay. The point is that everyone fails at some point when they're investing. Let's see here. I've got a little bit of an outline right here. It's interesting because there are studies to show this, but people are more scared to lose money than they are excited to make money. And it's just like within our human biology to feel that way. We're way more risk averse than we are excited to make money and take chances at making money. But you have to think logically when it comes to investing. You have to detach your emotional self from investing, because there are times where your portfolio will be down and you don't want to lose more money because losing money, sucks, and you'll want to sell, but you have to detach the emotional aspect from investing and know that, whatever is better for you, holding or buying more, something like that. I also want to do another thing. raise your hand or just put in the chat if you have already made your first investment. I just want to see like where our audience is at, so I'm not being redundant. Let's see, we got to get some. Okay, so we got a few hand raises. Not as many as. Okay, that's pretty good actually. That's really good. Okay, nice. So for those of you who haven't started investing yet, I strongly encourage you to start. And this has just been my own personal experience. I have a lot of friends that knew that I was like, it sounds so weird to say, but like the investing guy or whatever at my high school. Trust me, I was not trying to come off as the investing guy, but a few of my close friends knew that, you know, I would invest and stuff like that. And they would come to me be like, Jack, what can I do? How do I start investing? Tell me everything that you know. And I would go on about this 3-hour spiel about like, this is how the market works. This is what determines the stock price. This is like this and that. And it would take forever. And I would spend so much of my time explaining that. And guess what? I'd call them up 3 months later and they'd be like, I haven't started quite yet. And that is like the most frustrating thing, because if they had started, guess what? They probably would have made a lot of money. Let's see, we got, just tell them for legal reasons. I can't. Yeah, sure. That's probably the wise thing to do regarding my time. But I would tell them and I would give them a whole story, how to invest, how to make money. I'd give them like statistical evidence of how indexes perform over time. And you have that 3-hour speech, by all means, man, in the Q&As. But yeah, so basically I would give them this spiel, and it was really, really unfortunate to hear later on that they never started investing. And I've experienced that probably with like, I want to say 5 friends, where I've given them this whole spiel, they haven't invested 3 months later. So I just want to say, like, when it comes to investing, you just have to literally do it. Like, I don't know what your guys' excuses are right now, but the most important thing is that you just put your money in and you do it. Like, open up an account with Robinhood, open up an account with TD Ameritrade. You say it's because you're broke. I understand that. Like, I definitely have had periods of time in my life where I have not had very much money at all, but I think that we can all spare $5. That's how much like a share of I don't know how much AMC is at right now, but that's how much like some stocks cost. And I think also it's like, even if you do end up losing $20, you're paying knowledge, like just like college. You're paying for knowledge just like college. So I think that it's really important just to know that the most important thing, get over that hurdle, just go and do it, go and invest. I'm hoping maybe 80% of you, the reason why you're not investing right now is not due to financial constraint, but just go ahead, do it. Open an account with Robinhood. I can help you through that. There are plenty of tutorials and stuff online, and you'll be so much more fortunate if you do that. And the question is, if not now, then when? Because you can do it right now. You can buy partial shares. You can paper trade. If you want to paper trade, you can trade with fake money on brokerages. They'll give you a balance of $10,000. You can get Market Sim. It's an app online, and it will take 2 seconds to download, and boom, you have $10,000 that you can invest in whatever you want. Fake money, of course. And at least you're getting the knowledge. Take control of your future and start investing right now. Now, I want to show you guys something. This is the thing that really helped me gain confidence in the market. This right here is called a compound interest calculator. So this right here, you could basically put in some numbers and it will tell you at an effective interest rate, an estimated interest rate, how much that money will grow to over a length of time in years. So if you look right here, the S&P 500 index. The S&P 500 index is something that you can buy into on a stock market brokerage. Once you have, TD Ameritrade, once you have Charles Schwab, once you have a brokerage, a stock trading platform, you can buy into this. And ever since 1926, the average performance of the market, of the S&P 500 has been 10 to 11%. So on average, since 1926, the S&P 500, which is something you can buy, has gone up 10 to 11%. Now, I would say this is pretty effective statistics. I don't think this is super speculative. I think you can all see it's all nearly 100 years. So if you go right here, compound interest calculator, you can just type that in on Google and see it. Initial investment, let's just say $100. You invest $100 right now. Monthly contribution, let's say you can invest $100 every month. $3 a day, that's like lunch money every single day, okay? let's say length of time in years, let's say 40 years, because I'm assuming you all are maybe like 17 or 18. So just under, what is that? Just under 60. Estimated interest rate, 10.5%, because this is what S&P 500 has done for the past 100 years. And then calculate it. And if you look, it's $614,000 in 40 years. And this isn't like, trust me, there are a lot of ideologues that'll tell you like, oh, you can make this much money joining my pyramid scheme. This is the stock market. So it's not like I have no personal agenda to tell you guys to do this. This is a computer that will compute statistics based off of length of time in years, contribution, monetary contribution, and effective interest rate. And it's backed by historical data in the S&P 500, which is one of the most widely traded index funds that exists on the stock market in Wall Street. So it shows you right here, if you go to year 40, it tells you, by increments of 2 years, how much your portfolio value will grow. And if you look right here on year 40, you can see total contributions sits at $48,100. So that means that is your principal payment. So that is basically every month, $100 that you contributed times 12. So $1,200 per year times 40 years or whatever, plus the initial of 100. So basically $48,000. That's the total amount of principal. The amount you've put up will be 48,000. And the future value at 10% growing every single year is $614,000. So effectively, you've made $570,000. This is before tax, but it depends on what kind. You could do this in a Roth IRA and it would be after tax. And so it'd be like, yeah. So before tax, I guess you could say, this will be half of that once you sell and realize the gains. But yeah, this right here gave me a lot of confidence in investing and made me less worried. And it was easier to get over that first hurdle. Knowing the statistics of the S&P 500, which like I said, is a widely traded index, there's a lot of confidence in this. Knowing that there is an average that the stock market will go up every single year. Yes, it will have bad years. Yes, it will have years it doesn't move at all. Yes, it will have amazing years. There is an average and it is backed by statistics. And like I said, this is no pyramid scheme. This is the S&P 500 index, which basically is comprised of 90 stocks. And these 90 stocks will be, you can look it up online, but it'll be like Apple, probably like Wells Fargo, banks and stuff like that, tech stocks, auto stocks, stuff like that. So that's what I wanted to show you. That's a compound interest calculator. You can look that up if you'd like. And then I just want to list off a couple of things that I would have loved to know at 18 years old. And that would be start building your credit as soon as you can. This is outside of the realm of investing. Start building your credit. If you're under 18, become an authorized user on your parents' credit card so you can start building your credit. If you are 18 years old, get a credit card. 100%. I'm going to put in chat the credit card you all should have. Discover it card. There you go. Get a credit card, start building your credit. So then you can, when you end up getting an auto loan, you're not paying some exorbitant interest rate. You'll get a better deal. It'll save you money. It will save you a hassle. And it's a great piece of advice. And finally, I want to say that college is not necessary for everyone. I actually went to college. I went to community college for 2 years, and then I went to UCSB for 1 year. And I dropped out of UCSB when I only needed 1 more year of college to get that degree in economics from UCSB. I realized college wasn't for me. I would have spent another $35,000 if I stayed 1 more year at UCSB. I think people underestimate the toll that student loans takes on you. It's hard to apply for a loan on a house when you have student loans. It's hard to get approved for a loan on a house when you have student loans. It adds to your debt to income ratio. And it's just hard to pay off over time. So I think that it's important that, if you do go to college, study something that is marketable and will bring you value. And consider going to community college, because that saved me probably $70,000, which is a lot of money. I mean, if you're worried about losing $1,000 in the market when you're actually learning about investing in stocks and how to make a lot of money over time and get the best use out of your money, if you're worried about that, I think that you should probably be a lot more worried about taking on, if you're doing 4 years, $140,000 in college debt. So yeah, that's my whole spiel. I didn't prepare a ton of stuff, but I would love to take some questions about anything. Investing, college, stuff like that.
Yeah, so can you guys just put your questions in the chat, and then I think Grant will read them off and we'll go from there. Just if you guys could keep yourself muted, that'd be amazing. Okay, Grant.
John asks, if I have only a small amount of money, should I buy index funds or individual big cap stocks?
Okay, so it all boils down to your own risk tolerance. Obviously, you should probably assess that yourself based off of like future expected earnings, based off of how much money you have right now. Are you able to take risk? Are you able to afford losing a good portion of that money in order to sacrifice that money in order to gain the chance at making a lot of money off of that stock? It comes down to risk tolerance. And if I were you, I would say take the risk, buy like things are slightly more risky. You could buy some blue chip stocks, you could buy Apple, you could buy Amazon, you could buy Tesla, the things that you believe in. If you wanted to get riskier, you could get into options trading, but that's a whole different conversation. You can make a lot of money in options trading, but you could also lose a lot of money in options trading. If I was 18, I would have gone more aggressive. And I wouldn't have bought into index funds so much. So I hope that answers your question.
Yeah, I think that sounds like a really good answer. It's all about risk tolerance, right?
Yeah.
So Gordon Lee asked, would you recommend buying GameStop considering it's rising again? Obviously, you can pass on this one because no financial advice, but if you can give
I'll
your
talk on it.
personal
I personally am not investing in GameStop, nor would I advise someone to invest in GameStop. I could say you can invest in it. I mean, I wouldn't even, honestly, you can gamble in it. I'm not going to call it investing. You can gamble in GameStop if you want and buy some shares. There isn't like on the financial statements of a company, basically, the balance sheet and stuff like that, how much they have in assets, how much they have in debt, what their income is, what their revenue is, their costs. That would not support a per share evaluation of like $150. The reason why the stock is moving so much is purely due to demand and the short squeeze. Basically, like the institutional investors short selling. It's a little complicated. I would say if you don't understand it, don't invest in it. And I think that's a good rule of thumb. If you don't understand something, don't invest a lot of your money in it because you can lose a lot of money that way. I did the same thing with day trading. I didn't understand it and I tried to do it and I lost money.
Yeah, that's a good answer. So you mentioned GameStop can be a bit of a gamble, and I know there was kind of a debate a while back about like, is Bitcoin a gamble or an investment? Which side would you take in that argument?
I actually have a bit of Bitcoin, so I have probably 5% of my like worth, I guess you could call it, in Bitcoin and or in cryptocurrencies. I would say it's worth it to allocate some of your portfolio to Bitcoin or cryptocurrencies, up to 10%, depending on your own risk tolerance. Obviously, it's much more volatile than if you were to invest in an index fund or something that's probably traded on, the New York Stock Exchange. That's not to say for all things that are traded on the, NYSE, but for the most part, blue chip stocks and stuff like that. I would say a little bit. Don't heed my financial advice as something like Jack said it, I'm going to go buy it. But I would say from an objective standpoint, I think it's worth it. Do I think that prices right now could be a little inflated? I'm no Bitcoin expert. Just from my own personal opinion, I would say possibly, yeah, it's a little inflated, but you could always average in. So say you have $100, buy $10 today, buy $10 3 weeks from now, buy $10 3 weeks from then, and then average in. So if it does go up, if it does go down, you have a more like realistic cost basis.
Yeah, I was watching Graham Stephan's video on Bitcoin earlier, and it was like he was talking about how with these companies adopting Bitcoin into their systems and also putting some of their assets in Bitcoin, he likes the long-term investment in it. I'll read off another question here. Someone wants to know, what do you think of Kathy Woods and her ARK ETF?
It's revolutionary, I would say. I wouldn't say that it's like the most incredible thing to ever exist, but I would say it's revolutionary insofar as like it's a new thing that you can buy into that's like it's like a basket of stocks. I don't know what you would technically call it. It's not a hedge fund, it's not an index fund. I would say it's good. I like the fact that it's not a hedge fund. Like a hedge fund basically will buy a bunch of stock and then they will hedge against their position. So if they'll do something in options trading, they'll short sell their stocks as well. They'll buy puts. So basically they'll make money as the stock goes down, as well as making money when the stock goes up. But the reason why it's a hedge fund, that's why it's called a hedge fund, deemed a hedge fund. But they basically shoot for 7% year on year return. They don't try to make much more than that because it's easier to get people to invest in you for their retirements if they do hit that quota every year. Because once you're 70 years old, you're relying on your retirement money. You can't hold on to something that has potential to like plummet. And that's why it's a hedge fund. It's a hedge against your position. You make a little bit of money when it goes down, make a little when it goes up, but you don't make exorbitant amounts. I like ARK Invest because instead of hedging their positions, when their positions go down, like Tesla, they will buy more. So I think that it's a more aggressive way to invest in the market. And I think that's more in alignment with what kind of investing I like. So I like ARK Invest. Would I advise it for everyone? No. If you're your age, would I say it's a good idea? I would say it's a good idea. Yeah. And I think Kathy Woods she's very smart. So that's why it's different from a hedge fund.
Right. Here's another good question. Someone wants to know, like, what % of your net worth do you invest in the stock market?
So so interestingly enough, my net worth has been changing quite a bit in the past, I want to say like 6 months. My income has gotten a lot stronger. So I'm making a sizable amount of I'm not worth like a lot of money. I'm not a millionaire, not even close, but I'm making a good amount of money every month. So it's easy to build up a big cash position. Like if I have 3 months of income that just goes straight to my savings account, that'll be like probably like 20% of my net worth. Like, so I have a bigger cash position than I should, especially considering my risk tolerance. But I probably have, let me do the math really quickly. I want to say 70%, 75% of my net worth is invested. Yeah. I would like to get to the point where it's like 85, 90%. The reason I'm also saving up so I can buy a rental property. So that's why my cash position is a little higher. If I wasn't doing that, I would probably be closer to that 85, 90% mark.
All right. The next one here. In your opinion, is value investing dead or will it make a comeback in the coming years? I'm interested to hear your response on this.
Value investing?
Yeah.
I don't know, dude. I have no idea. I like, can you give me a different definition of value investing?
I mean, I think it's just the Warren Buffett type of trying to find undervalued stocks or whatever. Pretty much looking at the PE ratios, that type of thing.
Yeah. Okay. Yeah. Sorry. It's so weird because I'm in this like shelter of finance people where we don't use like the the terms that are widely used and recognized. We just kind of like have our own name for things. But yeah, okay, I understand what value investing is. It's a very, very viable way to invest. I would say it's going to make a comeback. If you find a company that you can deem undervalued, get into it. I think it's a great way to invest. I've actually been doing that recently. There was a stock, Skechers, believe it or not, like the shoe company that make like the not very cool shoes. I don't know. My dad wears them. I don't want to bag on my dad or anything, but they're not very, I don't know. So we found out that Skechers was actually undervalued when considering their financial statements and stuff like that. I bought into it and it went right up to what we saw as the fair market value. So I made good money on Skechers. I think that it's worthwhile. If you can pinpoint a company that is undervalued, snap on it, do it. There's no reason for it not to go up to that value.
Right. And I think if you do put like a price target on it based on the calculations you've done and it hits that, then like, obviously that's super cool. And you feel like good about your investment,
Right. So like the reason why those prices should go up is because you have a lot of people that are trading like, these crazy Robinhood, GME, like hype stocks and stuff like that. You have a lot of people, but at the same time, you have probably the same amount of people, if not more, that are trading like based off of like the financial position of a company. And at the same time, there's way more money in that. Like you have like institutional investors and stuff that are buying into those stocks. You have hedge fund managers that are moving way more money into stocks that they can deem as, undervalued and stuff like that. You have more money, but you just hear about the hype stock stuff because that's the exciting stuff.
Someone wants to know how you began working with Graham Stephan. Like, what's the story behind that?
Sure. So I was obviously, since a young age, I've been investing. I was interested in personal finance. I started watching YouTube videos on personal finance. I came across Graham. I was a big fan of his content. Um, and I got a credit card because of him. And then I just reached out and I got really lucky. I said, hey, like if there's anything that I can do, I will do it for free. I will do it to the best ability I can possibly do. I will basically give you my life. Like I was at the point where I'm serious. Like it sounds weird, but I would have literally done anything to work with Graham because he lived what I saw as like an ideal life, you know? Like think about the people that you admire and the people you respect. Wouldn't you do literally anything to be affiliated with them, to work with some sort of purpose that you believe in? I feel like working with a purpose is like the most underrated thing. It really is, because if you're working with a purpose you believe in, you're going to work way harder, and if you work harder, you're going to make more money. But I believed in what he was doing, and I reached out. He didn't respond to me the first few times, but I really bugged him like a mosquito. Like I was just like constantly seeing what I could get out of him. But finally, he responded to me, and that was basically it. He gave me this task of collecting emails from a public Facebook group. When people apply for the Facebook group, they put in their email to opt into a marketing newsletter. And I would scrape through this list of people. It was like 4,000 people. And I did it like really, really fast. When he had previously offered people money to do it, no one was willing to do it because it's like the worst thing ever. I still do it. It's terrible, but I found a way to automate it. But yeah, basically at this time, I spent a bunch of time doing that. And then that showed him that I was willing to go above and beyond. And it's hard to find people nowadays that are willing to sacrifice like their social life, sacrifice a lot of things in order to work.
Right.
I've learned that right now. We're trying to hire someone, and it's hard to find someone that is like willing to go above and beyond.
And there's something to be said about if you're saying like, I'll literally work for free. I just want to like learn. I want to just see how get involved in this. That just shows your passion for what he's doing and what you want to do with your career. So Shivam asked, is dividend investing an approach good? Is it a good approach at 18 years old, or is something more aggressive better in your opinion?
I have a buddy who does a lot of dividend investing. I've never believed in dividend investing. I like growth stocks more than income stocks. That's up to you. I think the most important thing to note is that you have to find your own style of investing. I don't even trade with the same style Graham has. Like we have totally different styles. I do more options trading. He does more things where like he buys into stocks that he personally uses. They're both very valid, reasons to buy into a company and buy shares. Dividend investing, I've honestly never done that. I never consider dividends when I'm investing in stocks. I like growth stocks. That's just the way it is. If you like dividend stocks, look at my buddy. His name's Andre, Andri or Andrei. His last name's Jik, Jikh. Look him up on YouTube. He has like his portfolio laid out with a bunch of like dividend stocks and stuff like that. It's not for me. I would say for you, if you're 18 years old, I always say higher risk tolerance. Try to take that step into to be a little riskier and get into that upper tier of investors. Take the risks.
Right. I'm pretty sure like the riskier you are means like the more growth you'll have on average. Obviously, you're gonna have some years where you kind of do pretty poorly, but it's not like we're looking to invest or retire anytime soon, so we don't need the money liquidated. Mm-hmm. Luke asked, what are your opinions on SPACs? I guess that's like.
So I actually, I have like CCIV, which it's a SPAC. I owed it just because, once again, a buddy of mine was like, dude, get into this. So I did it. I don't have any like opinion on like the what is it, like the special acquisition companies or whatever like that. I think it's fine if you can find a company that you think you're confident in, you believe in their stock, go for it. I have no like hard opinion on SPACs.
Yeah, I mean, a lot of times I think they get really hyped up, whether it's a good becomes a good company or not. There's just a lot of hype, which makes it risky. I know I
It's
bought
not backed by
into
any number. Like
right.
it's purely pretty like speculative. So I'd say like if you want to do it. Not my style of investing really.
Right. I made a lot of money off Nicola's SPAC when that
Did you
was
really?
yeah. I think I tripled or quadrupled my investment with
Oh
that
my
one.
God. I saw my friend's portfolio. He was like, dude, check out my portfolio. I've never seen it before. And I looked at it and he had like a bunch of money in Nikola and he was down so much money. I was like,
Really.
dude, I was like, sell it,
Yeah,
get it out
somehow
of there.
I found the right spot to sell. So if you guys have any more questions, just keep putting them in the chat. I know I've prepared a couple of questions. So I know you and Graham relocated to Vegas, right? So is there like did y'all like what kind of fueled that decision? And also, are there a lot of other people that are kind of moving away from Cali right now?
So it was honestly, it was like taxes. Big portion of that. You know, California charges the highest state income tax of every single state in the United States. 13.3% in the top bracket, which is just like ridiculous. I mean, if you're living in California and you're paying, if you're making like a lot of money, millions of dollars a year, you're paying over 50% easily to taxes, easily over 50%, which is, it's a hard pill to swallow, knowing that like every dollar you make past a certain amount is only netting you like it could be like 35 cents per day. It's just it's bad. So that was a big reason. Another reason is we have a really good community here in Las Vegas. So there are other financial YouTubers that live here, and we have plans to do collaborations with them and stuff like that. Las Vegas is also cheaper than California. Everything in Las Vegas is just like way cheaper. I lived in Santa Monica, where like literally just think about like if you're from Texas, if you're from Las Vegas, if you're from like Oklahoma, add like a 70% premium onto everything that you see, and that's basically prices in Santa Monica. So, and the
Yeah, I
minimum
can't
wage in
imagine
Santa
that.
Monica isn't 70% higher than it is in those places. So
And
those were like the main reasons. And
yeah, so
yes, people are moving.
it's probably super nice to like go into that kind of not cheaper area, but just lower cost of living area. It's probably refreshing.
Yeah, I wouldn't have been able to invest in real estate in Los Angeles. Like, I would have cost me, I don't know, like $800,000 to $1 million. Like, if I wanted, like, I mean, $1 million if I was lucky for a duplex. You know what I mean? But here,
Yes.
it's like, I mean, I
Yeah.
could buy a
So
place for like 200
do
grand.
you mind describing like what type of real estate investing you're doing right now?
I don't have any rental properties.
Oh, yeah.
I'm in the market for one. I have a few people that are looking to sell me some homes. They some of them are like wholesalers and stuff like that, and they're willing to like sell me at low cost or whatever. I'm looking at buying real estate. It's also not the most important thing to me right now, because if I do end up buying a rental property and I end up making, netting like $300 cash flow every single month, it's like a lot of stress for $300 a month, especially considering like my very busy work schedule. It's not the top of my priorities, but it's up there. And I'd probably buy a single family residence. There aren't a bunch of duplexes in Las Vegas. I prefer a duplex, but I'll go single family.
All right. So we had a really good question I want to address here in the chat. Someone pretty much asked, would you recommend maxing out your Roth IRA when you're younger?
Yeah, honestly, dude. So, but then again, I think you have to record $6,000 in income to actually be able to contribute that money to a Roth IRA, because you have to show that you've paid taxes on it, like through filing for taxes. So as long as you make $6,000 in a year or more, literally everything goes to a Roth IRA. If you're scared of losing it, you don't even have to invest the money that's in your Roth IRA. You could just put the money in there and let it sit as cash if you really want to. Like, if you're opening up a Roth IRA account, you actually don't have to buy stocks. You can just let the money sit there. If you're scared of losing money, do that. Open up the Roth IRA, max it out every single year if possible. If you can do that before 18, that's amazing. I even think I would even go so far to say, like, take loans to contribute to your Roth IRA if you think that you're going to be able to pay that off in the next few years. I'm not even kidding. Not kidding. It's that good.
Yeah, I think the one exception is that like you have to have made that money from like income or whatever. So you would have to have a job. It can't just be.
Yeah, I'm saying take loans as in like parent loan. If you're able to like, if you have a family company and stuff like that, and they're able to like loan you where you pay them back in the future, but they regard you as like an employee. There are ways around it.
Yeah, no, I mean, it's definitely probably the strongest tool, like kind of not really a loophole because everyone knows about it, but if you can take advantage of it, you want to maximize that for sure. Let's see, some more questions we got in. Someone asked, do you do leaps of short-term on options? Or, oh wait,
I don't
no.
do leaps on options trading. My strategy is sell covered calls on stocks with high premiums. So that would be basically, it's like I'm hedging my position where I will get a premium in order to cap my profit on a stock. That's what selling a covered call is. I don't do leaps. I think that is actually a pretty viable option strategy. It is not so speculative to do leaps because I feel like as a general, you can tell where a stock is going in 2 years, but you can't tell where it's going in a few months. And that's my logic behind selling covered calls, is because you do that a few months out, you don't know if it's going up or down. There's no way it's just luck, but you can tell where it's going over the few years. So I make money based off of the stock basically not moving a lot, like in a short period of time, by selling covered calls, like 45 days out or something like that. Because like I said, you don't know where it's going. It's a little complicated. I would love to explain it, but I think that it's a little dry and very complicated, my option strategy. Look up covered calls. It's a great way to make some passive income.
Right. So is covered calls within the realm of options trading, or?
Yeah. So in options trading, there are two sides. There are puts and there are calls. And basically, with each, you can sell and buy them. So if you're selling a call, then you're the one that receives the premium because you're selling the option to someone else. If you're selling a put, you're also the one that receives the premium. And just like any stock, there's a market in options trading. And in options trading, it's like you have the bidders and you have the asks, right? Like the bids and the asks. And then the contracts, the options contracts that trade with premiums as like the currency. That's like between the bid and the ask. It's a market all within itself that's rooted like kind of like in the stock market. You can also do options on real estate and stuff like that. But there are puts and there are calls, and you can sell and buy each.
Yeah. So why would you what's the main reasoning in doing more options than, I guess you also do investing, but what made you allocate a certain amount to options trading?
I have way more money in index funds than anything else that I don't do options on. But I actively like trade options way more than I spend any like effort buying index funds and stuff like that. The reason why I like options is because first off, it's exciting for me. Second off, I love it's pretty passive income. That's really exciting to me as well. And it's fun. And I also like the fact that you make money uh, regardless of what happens. The market goes up, you'll make money. Market goes down, you'll make money in options trading, depending on what strategy you're employing, of course.
Right. And I guess being in Vegas, you don't even have to go to the casino. You can just do options trading for the thrill.
Well, here's the exciting thing, Grant, actually. So just like a casino, you have the casino and then you have the person that is gambling at the casino. Options trading, unlike the stock market, is a 1-for-1 trade. So you're only engaging with one person. So if I sell you a call, that means you're buying the call. You're paying me for this contract. Okay. Just like the casino. So in the sense that like in options trading, there is a casino and there's a gambler. The gambler is typically the person that is buying the option. The casino is the person selling the option. Because like I said, the casino, the seller is going to make money regardless of what happens because they are the ones receiving the premium, which is like the payment for selling the contract. It's a little confusing when you get into the nitty gritty, but just like you said, you can use it as a casino or you can be the casino.
Got it. Okay, so we're gonna do 2 or 3 more questions here before we close it out. Here's a good one. Yeah, so if you guys have any questions, just throw it in the chat. I'll try to get to it. Nishal wants to know what advice you have if someone wants to grow a YouTube channel.
Sure. Let me think about this. I don't want to give any bad advice. pick something that you yourself would like to watch, and make videos around that. Um, I think it's, if you like I loved watching finance content, so it was easy to know as a viewer what I would like to see more of. And then I can go and I can create that content that I'm excited about. So don't make videos about something you're not very excited about. I feel like that kind of goes without saying, but that's a very good piece of advice, because you'll be passionate about the content you make. The more passionate you are about something, the more effort you're going to put into it. The more effort, the better rewards you're going to get, as a general rule. Pick something you're passionate about. And I would say, don't try to be a YouTuber just to be a YouTuber, because it's really difficult to build a business, to build like a business around your YouTube channel, to be a successful YouTuber. Be a YouTuber because there's something that you're so excited about and you want to immerse yourself in a community that loves talking about it, or you're so passionate about something that you love making videos about it. Say you love like your garden, make videos about your garden because you love the garden, not because you necessarily want to be a YouTuber. It's not the easiest thing to do.
Yeah. What do you think the biggest reason for Graham Stephan's growth in his YouTube channel was? Like, what was the main X factor?
A lot of it had to do with the time that he created his channel. So he was kind of like right on the forefront of like personal finance YouTube channels and stuff like that, right in the beginning. And I think honestly, the thing that makes him so successful, and he's continued to be successful, is the fact that he's able to read information, to digest that information, and to regurgitate that information really, really well. So a topic that is as complex and scary and foreign as investing, it's hard for a lot of people to digest that information, but he's able to read like a spreadsheet. He's able to read news articles and dumb it down and relay that information back in an exciting, in like a layman type way where anyone can understand it. And I think that's one of the reasons why he's so good. A lot of people comment, they're like, "This is amazing. I was never able to understand this until you said it to me." Like, we got a lot of those comments.
Yeah, I think that's awesome how it's not dumbing it down. It's just making it where more people can understand it, it's really good for the community.
Think about
Um,
if how like hard law is written, like
right,
legislature. Think if like you were able to read legislature, but it was in the form of like fifth grade, like reading level. Like,
right.
how nice would that be?
No, yeah, it just makes it easier for people to get into it. It's less intimidating,
Mhm.
Um, Caitlin had a question. Since the US dollar has been losing value, what do you recommend to do with the savings? I can kind of guess where you might go with this answer.
Yeah. So obviously, in periods of inflation, the stock market is likely to inflate as well. So invest your money. Another way that you can borrow money if there is inflation, I'm sorry, another way you can hedge your cash position if there is inflation is actually borrowing money. I'm guessing not a lot of you people have access to loans and stuff like that at this age, but this is an important thing to note. If there is inflation, you can borrow money against a house, against a car, against your assets, stuff like that. And then that money, the interest rates are still relatively low right now. So you could get a low interest rate. And then obviously, as the dollar declines and inflation goes up, then basically like the money that you have borrowed will also be able to it's a hedge against inflation, basically.
And I think also cryptocurrency serves as a good hedge for that, because I think it can maintain its value if the US dollar begins to devalue, right?
I agree. Crypto's good for like a hedge against inflation, but I think like theoretically it would be good. But at the same time, we've kind of noticed it's basically just like mirroring the market right now. So like the market has a red day, crypto has a red day. It shouldn't be like that, but it is kind of tied to the markets. But you're right. Theoretically, crypto would be a good idea.
All right. So I guess if there's no more questions coming in, Ananya's going to wrap us up here. Thank you so much for answering all these questions.
Wait, I had
and
one more. I just
Before
have,
you
I
leave,
have to ask.
okay, wait, Jim,
I have to ask this. I just have to. So if you were 18 right now and you had like, say like 10,000, like how would you, obviously you don't have to give like a super precise answer, but how would you probably like roughly go about, I guess, investing that money if you were 18, I guess?
I want to give a precise answer.
Okay, that's even better.
If you made 10,000, then, and it's filed on a tax like return, invest it, max out a Roth IRA, 1 million, 1 trillion, billion %, max out the Roth IRA. If you didn't make it, like it's money that you've been gifted, it's money that isn't going to be shown on your taxes, I would say this is how you're going to want to divide it up. I would say, I'm going to put this in chat. This is what I would do. Don't heed my advice just because I've said it, but this is probably what I would do. I'd probably say $1,000 in crypto, so 10% crypto. I wouldn't advise 10% crypto to people that are older than 35, 40, 45 years old, but you guys are young, so I would say 10% crypto. I would also say, I want to say 10% go into risky stocks just to learn about investing, get into options trading with that 10%, learn what a covered call is, learn what selling puts are, even buy options if you want to. 10% is to learn to lose. Literally doesn't matter if you lose it, it's 10%. $10,000, like $1,000 isn't life-changing money, So be okay with losing that 10%, be risky. I would say 60%, 50 to 60%, you could do, let's see, stocks that you like. You could do blue chip stocks, individual companies, such as like Apple, such as Tesla, such as even Palantir, stuff like that. If you like it, CCIV if you want, if you're a Meet Kevin fan. And then the rest, I would say just do an index fund, or just index funds. You could split it between different index funds, such as like, here, I'll put a few that I really like in the chat. There are a few that I like. I think I'm getting the tickers right. I hope I am. What brokerage do I trade with? My main one, where I have most of my money, is in Vanguard because it's index funds. But aside from that, I would say the second most is in Robinhood. It's not a great brokerage, but I like the app. I don't actually use Webull. If you do cut out anything from this interview, cut that part out.
Sounds good. I think that was it for questions. I think we can do a quick picture. She, can you take that? And everyone would like to so kindly turn on their cameras. That'd be lovely. Rishi, will you take the